Good morning and welcome back to Almus Market Mornings. We start the week with a better risk sentiment and a weaker dollar, though largely markets remain in a range. There was a big strength in yen on Thursday after BOJ intervened to support the currency. On the war front, the updates are as unclear as before, with US claiming it will start guiding ships not involved in the conflict via the strait, while Iran said it would be considered a ceasefire violation. Good morning, JK. What are the key developments you would be tracking for this week?
Good morning, sir. So there have been quite a few headlines from the war front, and there's talk about the new proposal that Iran has submitted to United States. Although most of them, like Donald Trump, has said that he is not satisfied with their proposal. One of the proposals also mentioned that Iran is probably ready to open the Hormuz Strait gradually, even before U.S. Removes the blockade. And the sequencing means Iran doing first and then US doing later. It's a good news. That's one part. I don't know how realistically is going to happen. Secondly, US also said that they will be escorting all the ships, cargo ships, through the strait, and with ensuring safety and all that. But so again, that requires the Hormuz Strait also to be open. Now, the important thing is that whether these proposals will actually come into actual reality, because we don't know who is in charge in Iran, and the one section of the people in charge are ready for negotiation and take it forward. At the same time, there are militant groups which are actually don't want to move forward with the what America is demanding. So it's still not a very major progress. I think there are a lot of negotiations that is happening, and what the world will believe is that even if there is some sort of a settlement, at the same time there could be the militant groups and the extremist groups which will continue to have their own approach, and they will not be surrendering whatever America is demanding. So it's going to be a long drawn thing. Yes, I think there was some relief rally in oil, no doubt. I would say a relief uh, fall in the oil price. We are almost at 124 last week, and then we came off to around 105, and we are back at 108. That itself is a big relief for the markets. And of course, the economic data from Eurozone was somewhat not inspiring. Growth was lower. At the same time, inflation numbers were higher, although as expected. So there is a fear of stagflation in Eurozone. US growth came at steady at 2%. PC inflation headline was higher as expected. Core inflation was also higher. So again, if you look at the overall numbers on inflation from various regions, you get a sense that central banks are definitely on the verge of hiking rates in the upcoming meetings. US not so clear. We have to wait and see how Kevin Walsh approaches and how the board is going to look at things. But other regions like Europe, UK, and even Japan is likely to see the rates going up. So that is a key takeaway from last week's central bank meetings. And this week, of course, we have Australian central bank meeting tomorrow, and most likely Australia will also hike rate in this meeting. This will be the third hike that they will do, in a row. So that's keeping also the bond market is somewhat weak. Yields have been higher. The surprising thing is that the stock markets have been holding up very well, despite fears of higher rates in going forward, as well as the war-related tensions that is not going away, higher oil price sustaining. So I think all this is led by the AI related optimism, which is driving the US markets, as well as some of the emerging markets, Taiwan and Korea, is including Japan risk assets. Dollar is very surprising, or rather, I would say it's rather becoming uninteresting because it's staying in a range. It's not crumbling on from Europe. Euro is also moving between somewhere in the mid 16 to 1.18. So no real there. Reason, of course, you also mentioned there was eventually there was intervention from Japan. There had been a lot of statements from the big officials for quite time, but the market was not ready to believe them that they would turn into action. Eventually, there was action, and just before they acted, even the official said that this is the last warning that I'm giving you, but market still tested 160.70 before falling to 155.50 on the intervention. Now, of course, there's no major follow through on after the intervention because that's what we normally see. Because I think there is no further intervention. Also, because it's not that Japan wants yen to be too strong. At the same time, they don't want it to be too weak. Profit in a range. That's the same essence that I am getting. Uh, so dollar is going to be in a range for some more time until we get a new trigger for the same. As far as rupee is concerned, we hit a new all-time high at 95.33, just above the previous all-time high. And then at that the level, we did see some, interest to sell from exporters as well as from long positions built in the market. If you recall, at the beginning of the month, we were at 92 half and we came, almost 3 rupees higher. And there's again some sort of intervention, also concern that again the central bank might come in with more regulatory measures because rupee was moving one way. Although there was no fresh bad news, the only persisting bad news for the rupee is that the capital flows are still missing. The month of April saw more than 7 billion of outflows, so that continues to be a challenge for the rupee, as well as as even some of the officials have acknowledged, the Middle East war could also affect the remittances. And remittances have been funding our current account deficit for quite some time, and that is not a good news. So I think any oil-related or war-related good news is not going to help the rupee to a great extent. I don't think even the best news can take the dollar rupee much below 94, maybe 93.50 at best, and maybe 94 is what I'm thinking. At the same time, upside may be capped because government and RBI could introduce more measures for say checking the rupees one-way move as well as to improve the capital flows. This week we are faced with holidays in Japan and China. UK is also closed today, but then we have later on the all-important jobs number from US, and that's possibly of the most interest as far as the market is concerned. In India, today, of course, we have the state election results in some very soon, in less than an hour. No major implications for the market, but then any major change in the outcome will perhaps be looked at with interest by investors. Thank you.
Thank you, Jack. And yeah, so when it comes to the war, there is the exchange of proposals that's ongoing. There's a new proposal that has again been submitted by Iran, but President Trump doesn't seem to be very satisfied with it. US is said to be escorting ships via Hormuz. It plans to start, but it requires Hormuz to be open in the first place. So whether all of this will materialize or something is something to be seen, because even when it comes to the Iran side, who is in charge is sort of unclear. But after these developments, there was some relief in oil prices. That's a bit of the positive. Then we had a bit of growth and inflation numbers from US and Eurozone. Likely stagflationary fears will exist in the Eurozone. When it comes to US, it's still fine. But more or less, we are in a rate hike sort of cycle, at least the beginning of a rate hike cycle. That's what it seems. When it comes to our domestic markets, the rupee hit a new all-time low against the dollar on Thursday, but there was some relief that was seen due to the central bank intervention and slight relief in oil prices. But missing capital flows will continue to be the ruling. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.